And good evening. This is the Elliott Wave update for the S&P 500 for Monday, December 6th, 2021. I am presenting the alternate view tonight. I have gone through and I've changed the S&P chart to reflect this view. And that is that instead of it being a 1, 2, 1, 2, 1, 2, 1, 2, the market has declined thus far. And what I'm labeling as a triple ABC decline. The ABC, the X wave, ABC, the second X wave, ABC, the third set of ABCs. Now, what that implied going back was that likely would have been an intermediate A wave, according to the Elliott count that was in place. And secondly, what I then began to realize is that the Dow, the S&P, the NASDAQ, and the Russell all made their lows on Friday. And so when the rally began yesterday, but it got sketchy because the NASDAQ wasn't really quite interested in rallying and actually did spend some time in negative territory several times today, that things did not appear to be in unison. Well, then once the NASDAQ got itself going today, as the Dow, the Russell, and the S&P all continued to rally strongly, it did put in place that all four indexes are now moving in unison, are moving in the same direction, are moving under stronger, everybody stepping back in as buyers type of moves. The Dow up over 700 points at one point today. The Russell up over 50 at one point today. The NASDAQ up over 150 at one point today. And that's after being down, I think, 50 or 60 points this morning. So there was some strong volatility, again, both directions, but the end result shows that this level is likely more than just going to turn out to be an intermediate A wave. Now, what can transpire is that, yes, the market, even if this was an intermediate A, the market could go up and at least equal the high and go above the high. Again, producing a situation that I have described in the past and tried to chart, and that is an irregular B wave. But when I went back and I was looking at the 4-hour chart here on the S&P, I started to go back to previous problem areas where I really wasn't satisfied with the count, but I had moved it. And one was here. This, I had put, this is where the minor third wave was prior to today. So I always had a little bit of a problem with the being 3, 4, and the 5, and the 3 being here, and the 4 being here, and the 5, and the 5 being here. And I felt that this was a little bit unclean and not really top forming as I would think it would be, as this energy we're getting now is suggesting that it's just going to push and push and push. And maybe we still will form a triangle, possibly, but it'll be a diagonal triangle angling up towards a peak. So I went and I moved the minute 3 up here, 4, and then the minor 3 over. That suggests that this is the minor 4, and we have a minor 5th wave yet to come. So we still have new all-time highs before the minor degree 5 is complete, the intermediate degree 5, the primary degree 5. So we still have all those highs out there waiting to be completed. This is not a signal that a new bull market has begun. Unless you're such a near-term trader, then yes, you're going to be in a bull market for a little while. But it's not a new bull market. It's a completion of this very, very long term. The part that we really are focusing on, even if we're talking about March 2020 lows to now, that if it completes in March of 2022, it's 2 years. 2 years, that was what would be corrected. But we can go back much further. We can go back to the 2009 lows. which puts us at 12, maybe 13 years old. We can go back to lows prior to that as these degrees continue to climb as to what is being completed here. And via the SPX, we can go all the way back to 1932. So there's a lot still to be corrected, but let's shrink that right back down into this term of time that we're talking about. So if this is the 3 and this is the 4, we can run up and make new all-time highs yet again. And once again, it's not anybody's being right, nobody's being wrong. It is what the market is telling us. And that market was telling us we were going down when we were going down. It was just problematic in terms to count it as a stronger decline. And now we've got the alternate view here. So let's take a look. If we're in a 5-wave rally and we're looking for new highs, what can we start to pinpoint? And now what I will do is put back the Fibonacci extensions, which again, when we go back out to that 4-hour chart, connects the bottom of minor 2 to the top of minor 3 to the bottom of minor 4 to project minor wave 5. So now back over to the hourly. In what also I have running are the retracements, which just cover this initial decline down. So where resistance can be found, if we had to go back to the previous count, and this is wave A, and we're looking for a B wave, a normal B wave would start to top out right in here to right here, approximately. Yes, a B wave can go all the way back up and get closer to the high, and then it would be an A, B, C flat, but we're looking for, and if that's the case, I'll be honest with you, if that's the case, we could be an ABC-A, an ABC-B, and then a C wave rally and still only get up to here. So there's still many things that could be in play. We're now dealing with if it's going to be a rally, and that rally is building, and we're going to be looking for 5 waves of minute degree if it is a minor 5th wave. So 1, 2, 1 of 3, maybe. Where can it get to? That's these inside Fibonacci. Those are the extensions. So the first is really right there, 4604. We got above it, came back down below it. I should easily take it. Okay, this is the way the market needs to act now. Next up would be 382, which is 4674.75. Right there. It may pause there, catch its breath, but it should continue. Then 4729, 4740. It should continue, but it's going to unfold in 5 waves. So we have 618 at 4786. That would be a minimum, because 5th waves can be 0.618 of the 3rd wave. And that actually is very common. And that comes in at 4786. And guess what? It's a new high. Then we have 4827. We have 4865. Again, these numbers are coming back. And they're not coming back to haunt us. They're just coming back. So here we have the 100%, which is where minor wave 5 would be equal in length to minor wave 3 at 4967. So we still are dealing with 4967, 4970 to likely 5,000. That continues to be in play. In fact, here we go. We can start, we can keep going. We got the next, you got very high numbers, and it could. There's just whatever's going on is going on. And I know there's a ton of stuff, but here's really what needs to be done right now. We need to just focus on what is the market doing, not why. Obviously, the why is not going to be able to fit in. There's too much why, which could pull it and drag it in either direction. So we're letting the market choose, and the market is seemingly telling us a little bit right now. And it's all technical. It's technical. So technical analysis is allowing for new all-time highs. Maybe fundamental analysis or earnings reports or whatever else goes around all of that is telling us maybe, maybe not. Doesn't make any difference. Right now, this is what the market is doing, and that's what we're going to focus on. So we have a lot of upside room. What can happen tomorrow? The market should continue to show strength. There was a lot of strength today. A pullback, sure. A consolidation, sure. But it really should hold itself higher than 45.52. That would be big for me. If it came down and it broke 45.50, it's going to break this pattern and leave it as 3. It's going to leave it as 3. You can see it, 1, 2, 3. It would be an ABC, and then it's something different. So that's what I'm saying. The market needs to now tell us and confirm what it's doing. And to do that, it needs to rally and rally strong. Get itself up to 46.16. Get itself up to 46.45. Then pull back again. And then we'll have those levels. But pullbacks right now need to be more on the minimal side than on the excessive side. When they start breaking support levels coming down, they start breaking below some of these moving averages that really should hold. On an hourly chart, they should begin to hold. I'm going to open this up so we can take a look. These levels need to hold and contain the selling. When they don't and they break, it's telling us the market is basically laying out some plans that no, buyers are not in control anymore. The sellers are control. And again, it's not going to matter why, it's just happening. So we need to be able to trade it. So upside, we've got the marching orders. And we know that characteristically under using Elliott, that the strength should follow and we should not be getting the stronger. These should be minimal pullbacks and the strength should still be on the upside. And granted, this was the close and that was likely all pre-planned orders anyway, but I would suspect that we should continue to go up. So I'm going to leave it right there. I have said a lot. Continue to trade smart. Trade using the moving averages that really do help guide you in terms of entry, exits, and what direction. So use them. Use the Fibonacci resistance and support levels going in both directions. We now have retracements, which cover any move within the move that we just did from the all-time high down to Friday's low. Those are resistance points going up if the move is going to finish inside there. But we're also including the larger move that could possibly be underway. And those are resistance. Coming back off, they should be support. But right now, that's not the case. So the market needs to quickly get itself back above 46.04 and keep going. That's the upside. On the downside, it needs to hold above 45.50. Below 45.50, we will likely be left with a 3-wave rally, and then I'm not going to be looking for much other than it continues to go down. Next update will be Tuesday, December the 7th.